Good evening, guys. Sterling here with the daily market preview for November the 30th, 2017. Let's go ahead and go through the pound to begin with here. So for yesterday on the pound, we were treating this as a first push to the upside, and we were looking for that continued second push up. As you can see, we never made an attempt at a lower level. That lower level that we had in place was at 33.38, which is right here. No contact with that level means no trade, and you did have this upper point which reset here, but when you got the stopper on the backside of that level, which would have been over here, the confirmation once it occurred never got a pullback anywhere near what you'd have needed, so no trade on that. And then as we look over at the euro here, we were looking for the third push down. The move that we had, if you look at this total length move, was about 67 pips, so that's enough to where I'd consider that as the third and final push. The level that we were looking at, or the possibility, I should say, there just wasn't one in place. And this is a good example of a situation where we have a valid cycle, we have a valid push, but we just didn't really have a sizable point from which to take that push from. So no trade there on the euro, and that opens up the bias for us today. So for today, with that open bias, there's really one level that I see, and the hourly chart does a good job of showing that with this low here, and you can see that there's really nothing else in the area, so that low becomes pretty substantial to me because there's nothing else to choose from. That level's right there at 1824, so 1824 will be the one and only lower listed point that I have in place today. As we look at upper points, there's a couple possibilities here. One would be the recent highs that we just set. That was one level that I liked. We had a couple responses through here. You can see you had a floor through here, came back, tested the backside, and then obviously your overall highs. If you look at the daily chart, you can see after those overall highs, it's quite a ways back into some other significant levels back through here, and we're already past the ADR. So for us here today, this overall high is as deep as I would consider. Let's go into the 15-minute chart now to see, to actually pinpoint those levels here. So we'll take this, zoom in a little bit. You can see the close on this candle that we had here was at 1874 and 8/10. So we got to round that up to 1875, and that is the first possibility. Pretty big level, nice push down was the overall highs of the day. So decent point to the upside. You have this high right here. The open of this candle is at 1917 and 3/10, so that's why we have to round this up to 1918. And then your overall highs here, which are sitting at this 59 level. Zoom that up there, 1959. Okay, so the first thing I'm going to check is the distance in between my first upper and first lower point. It needs to be at least whatever the max take profit is. On the euro, that's 40 pips, so there's 52 pips, 51, 52 pips separation there. There is enough separation between those two levels. My concern is to me, what is maybe a higher potential for reversal here today, given that this move would be a completed cycle, or we treat it as a completed cycle. But we don't have an official valid cycle. We're well over that minimum separation between those points, so no official reason why that level would be tossed out, and therefore I'm going to leave that point in here today as a valid upper point, valid first upper point. Continuing to the upside, we have these highs here. There's plenty of separation in between this point and the next point. There needs to be at least 20 pips separation, and there's a total of 43 there, and then to the next level, there's a total of 40 pips. So there's more than enough separation there, and I probably wouldn't use this point if it wasn't at the ADR or past it. I'd probably just opt for the overall high because it's not not a necessarily special level or hugely special level. It's a decent point. The market would be extended by the time it got there, though, so that increases my belief in that level, and why all three of those points will stay in place here today. As we look over at the pound indeed did give that second push to the upside. The overall length here was 110 pips, so that is a valid first push, and it's a matter of getting a second push here today. So looking at the hourly chart, there's going to be two levels for me. I like these overall high, or two possibilities that I was looking at here today. The lows of 1380, or 3380-ish area. We'll go pinpoint the exact level, illustrate that. That would be the overall lows for the New York session on that day, and the overall highs here around the 3440 area. Again, we'll go mark the exact point here in a minute. Would be the overall highs in the day during active trading hours. Going in, picking the first level, if we zoom up to this point right here, this is 45, and the open of this candle is 34, 44, and 6/10, so that's why it's rounded up to 45. 34, 45 is the nearest whole number without going into it. And then the lows we had set here today, if we bring this up here, that level sitting at 82, 33, 82. So the first thing we'd need to check is the distance in between those two levels, being that these are both lower points here today. We need at least 20 pips separation, being that the pound is below 100 pips. Realistically, though, I'd probably still be using 30 pips separation since we just crossed down below that threshold. This is a good example of where a little common sense with the mechanical rule, to me, goes a long way. If at 100 pips and a tenth, I would use 30 pips separation, well, then I probably wouldn't just jump to 20 pip separation in between listed levels if the ADR went down to 99 and 9/10. Again, a mechanical rule is great, but you have to use some common sense and say, what's the principle of this rule? Am I satisfying the principle of that rule? And just arbitrarily jumping to a 20 pip separation in between levels when you get down below 100 by a pip or two is not a, to me at least, is not an application of that rule set. We're kind of applying the common sense with the mechanical application of that rule set. So 34.45, just as kind of a side point I wanted to add there on that. But anyways, 34.45 would be the lower point. First lower point, that would be the first possibility that we have. Separation between those two levels is 60 pips. That's why separation really doesn't matter in this case. It's well over the minimum. Addressing it because, again, it is a side point that you're always going to address with each setup. But in this case, plenty of separation between them, 34.45 as well as 33.82 to the downside. So that will be the two lower levels, and we will look for the third push up today. So that'll do it for the pound. We'll have those two levels here today, 34.45 as well as 33.82, and we'll look for that third push to the upside here today. I'll see you guys in the room tomorrow for the New York session. We'll be there at 9:15 a.m. Eastern. Look forward to seeing you guys there. Until then, happy trading.